Hello, XRP community. Tonight's update carries both excitement and unease. On one side, institutional adoption of XRP continues to accelerate, with record ETF inflows and trading volumes led by Asia. On the other, growing signs of a possible U.S. offensive against Venezuela are stirring concern among global investors. A reminder that geopolitics can disrupt even the strongest market momentum. Let's begin with a market pulse. As of today's close, XRP trades around $2.23, slightly off its intraday high of $2.28 after touching strong resistance. The crypto market overall is recovering modestly, with Bitcoin hovering near $89,000 and Ethereum stabilizing above $4,000. U.S. equities closed positive, adding more than $1 trillion in market value, a constructive sign for ETFs, especially those tracking XRP, now fully integrated into Wall Street trading desks. Across the ETF landscape, the first real performance data is in. The Bitwise XRP ETF led with $36.5 million in net inflows and roughly 1.5 million shares traded. Franklin Templeton's fund followed with $23.8 million in new capital and close to 1 million shares exchanged. Canary reported $18.9 million with healthy liquidity, and Grayscale rounded out the list with a smaller, premium price volume, given its higher per-share cost near $43. Altogether, the four ETFs combined for roughly $86 million in daily inflows, capital that will now be converted into physical XRP purchases during tomorrow's trading session. That conversion is critical, because these are physically backed ETFs. Issuers must acquire real XRP from the open market to match investor inflows. The result is a constant drain on circulating supply. Every dollar entering an ETF translates into XRP being removed from exchanges and held in custody. This mechanism is already tightening liquidity and amplifying price reactions across the market. Meanwhile, activity in Asia remains intense. South Korea's Upbit exchange once again recorded XRP as its most traded asset, surpassing both Bitcoin and Ethereum in local volume. This consistent demand from Korean traders has raised eyebrows in Western markets, suggesting that Asian investors may be positioning early for utility-based appreciation as institutional adoption deepens. But amid all this positive momentum, a dark geopolitical cloud is forming. Multiple intelligence and policy sources now indicate that the United States could launch a military offensive against Venezuela in the near term. The official rhetoric remains ambiguous, but internal communications point to escalating tension and troop readiness near the Caribbean corridor. At first glance, some might assume removing Nicolas Maduro's regime would be bullish for markets, restoring democratic stability and opening Venezuela's massive oil reserves to global trade. But in practice, military intervention tends to have the opposite effect. It injects uncertainty, triggers risk aversion, and drives investors towards safe haven assets like the US dollar, gold, and treasury bonds. Volatile assets, including cryptocurrencies, often face short-term sell pressure as global risk sentiment deteriorates. The potential consequences extend far beyond Venezuela. A U.S. offensive could spike global oil prices, given that Venezuela holds the largest proven reserves in the world. Higher oil prices would likely feed into global inflation, prompting central banks to tighten monetary policy, the very opposite of what risk assets need right now. In Latin America, the ripple effects could be severe. Capital flight, frozen investments, and widespread economic uncertainty. For the crypto market, that means we could see temporary turbulence. History shows that during the first phase of any military conflict, investors often liquidate risk assets before rotating back once uncertainty settles. This pattern played out during the Middle East conflicts, the Ukraine crisis, and even pandemic shocks. XRP's long-term fundamentals won't change, but short-term volatility could rise sharply if headlines escalate. It's also worth noting the timing. Former President Donald Trump was expected to sign an executive order today, but the event was postponed. Some analysts believe the delay is connected to the ongoing Venezuela situation, suggesting strategic caution from Washington. The silence has only amplified speculation. Yet even as geopolitics threaten disruption, the structural story for XRP remains intact and arguably stronger than ever. Institutional funds are flowing, regulatory compliance is settled, ISO 20022 migration is complete, and liquidity networks are expanding globally. The alignment between traditional finance and blockchain infrastructure is no longer theoretical, it's operational. So how should investors interpret this dual narrative? Short-term, geopolitical risk can cause noise. Medium to long-term, liquidity always finds utility. If the global system faces instability, the need for faster, cheaper, and cross-border settlement only grows. And XRP is positioned at the center of that mechanism. As we move into Tuesday's session, keep an eye on ETF inflows, exchange balances, and regional trading data, especially from Korea and Singapore. Those indicators will reveal whether institutional demand can absorb any macro-driven volatility. Here's the key takeaway. AU.S. Venezuela confrontation could shake markets temporarily, but it does not rewrite the structural shift already underway. XRP has entered the era of regulated liquidity. The combination of ETFs, ISO integration, and institutional alignment makes this asset less a speculative token and more a component of financial infrastructure. So, while the headlines may turn red for a while, the foundation beneath XRP keeps strengthening. The short-term risk is political. The long-term opportunity remains mathematical, and that's where real conviction lies.